Hi everybody, Randy Pierson here, Vice President of Life and Annuities here at Gordon Marketing, and today I've got with me Tim Luby, our RVP on the annuity side of the business. And today we wanted to talk a little bit about fixed indexed annuities and kind of what's new out there, what's hot, what's selling. And so Tim, let's just jump right in. What are you spending a lot of time talking about in the annuity space these days?
Well, I guess what's new, what's different is, one of the main things that's kind of new that we're getting some great traction with is the fixed income, the income riders on fixed indexed annuities, particularly guaranteed income riders. We have some performance-driven riders, but we're sort of favoring the guaranteed income riders. And there's been just a tremendous amount of innovation that's gone into this market significantly. We didn't have riders like this at all 10 years ago, and now they're sort of all the rage and highly competitive, and a lot of sort of competition and innovation going into those right now on a consistent basis.
Yeah, anybody who's going into retirement saw that. It's kind of that, what's my number, right? I mean, what's my income number I need to have to maintain my standard of living? And from our perspective and what we do in helping agents, how can we help them find the product that can fulfill as much as possible that number, right?
Right.
And, so what else? I know we were just talking about this incredibly increasing interest rate environment. How's that having an impact on the FIAs that agents are selling right now?
A pretty significant impact. Annuity rates typically respond to, changes in the interest rate environment pretty well. But on the fixed index side, you sort of often see like a multiplier, so if a fixed rate would go up from 1% to 2%, you would see a cap rate or an index move significantly more, because you're increasing the budget that the carrier has to use to purchase that, the cap rate or the par rate that they might use for that product. So we've seen rates move up a lot. And that, again, I'm used to talk about innovation, but things have changed. These are not your grandma's fixed index annuities anymore. The indexes have changed. The opportunity to buy up higher rates in addition to new indexing has changed. So, many years ago, you would expect to see, a good cap on the S&P and maybe a couple other things, and not very many par rates. And if you did see par rates on the S&P, they were in the double-digit numbers. We're seeing an awful lot of indexes today that have participation rates that are at 300, 350%, I saw today, on a 2-year index, let's say. It's not a 10-year, but a 2-year term. And then, par rates or cap rates as high as 10 on 1-year S&Ps, for example. Those are very high rates, coupled with the new indexes that illustrate really well in terms of the way they perform.
Yeah, we spend a lot of time talking about this increasing interest rate environment and how that can directly impact consumers through multi-year guaranteed annuity products. But those rising interest rates also can have a significantly positive effect on a consumer's ability to grow their wealth through these indexing strategies. And I'm not confident that a lot of producers fully understand how that can happen. That's where we come in, right? That's where you come in and your team in helping agents understand these products, how they work for the clients, and how they might better explain them to their clients.
Yeah. Well, it's interesting. And for agents, whether they sell annuities often or whether they rarely sell them, the values that we're seeing in these illustrations is sort of something that we have not seen in a very long time. I think I shared with you recently that I've got a handful of very high quality, good companies that are very disciplined about the way they do things and that kind of thing, that are having illustrated values that are 3 and 4 times the value that goes in just 10 years' time.
Yeah, staggering.
So the illustrated values are very strong, and that's pretty compelling. It's kind of hard not to.
And by the way, let me just mention that our annuity business this year is up precipitously, right? We're going to have our best annuity year ever here at Gordon Marketing. And I'm sure some of it has to do with the rising interest rates, the market and where it's at right now. And of course, in no small part due to the efforts on your part in helping drive that business. But let's talk a little bit real quickly about case design. Let's talk about, so an agent stumbles upon somebody who's got some money and they're interested in maybe finding a better place for it. Perhaps they're squirmish about the market, right? And that agent calls you and says, hey, I think I got a case.
Right.
What do you do?
Yeah, I've got a guy, I've got a couple. Oh, well, I help them. I point them in the direction. I help them ask the questions. Okay, so who are they? What do they have? How old are they? What are their dreams for that? What are their objectives? And then we can kind of close in once we understand that better on what the best solutions in the market are that are going to meet their needs, that are going to help them accomplish their goals, their objectives for that money.
So I'm assuming that, I'm an old school guy, 30 plus years in the business. I'm assuming we have some primers or fact finders we could put in their hands to help them better understand what questions they should be asking their client.
We do, yes. And we'll help them with that. And if they have the client on the phone or the client's in their office, we'll certainly help them with that on the fly. But we have some outstanding tools available that will help them with the fact finding and so on.
All right.
But there's also there's not a good replacement though for some of the case design stuff that we can do. We have tools that we use to help them with it, but those same tools in a novice's hands aren't going to be worth as much. So a lot of times they do need to embrace the case design team at Gordon to help them with that.
Very good. So in the limited amount of time that we have left for this segment of Selling Life and Annuities, can you give us just one example of what you're excited to talk to producers about when they call up and ask about FIAs, product-wise?
Oh, you mean like a specific product? Or
Yeah, leave the viewers wanting more. So don't mention the name, but give us a little description of, in a bit more detail, what's out there that they could find out about.
I think probably the one that I get the biggest kick out of these days is, as I talked about, the number of high quality, great carriers that I have that are illustrating 3 or 4 times the value in 10 years. I think that's it's an incredible value proposition, but the fact that I've got so many of those right now, and it could be on a short 5-year chassis, a 7-year chassis, a 10-year chassis. So that's a really compelling opportunity for the client, and it's one that the agent won't get paid very well for.
Yeah.
I like participating in that, process.
So what do you think is most prudent right now? A shorter duration, say 5 years, or something longer like a 10-year?
It depends a lot on the age of the person, but I really like the 5-year durations for people, at my age, let's say, not quite within striking distance of turning retirement income on. So 5 years would be a much more comfortable duration because at my age, in 5 years, I'm going to know a lot more about what my retirement looks like, when it might happen, those kinds of things than I do today.
Yeah, and I'm thinking also, our industry, the insurance industry, is so innovative, and product development is happening at such a rapid pace. I'd hate to be locked into a 10-year product, and 5 years from now, there's such great stuff out there. I'm lamenting the fact that I might not be able to get in on it, right?
Right.
Yeah.
That's one side of it. The flip side of it is the value in some of these 10-year products. You talked earlier about dialing into your number, your income number. And what's so cool now is it used to be you had to save the money. You had to know how much do I have to save sort of on my own so I can meet my income objectives later. But now we can say, what do you have? And we can tell you, okay, this is how much income you will have in 10 years or 15 years when you choose to turn that income on. That's kind of great. And it can be completely guaranteed. No downside market risk. Know exactly where they're going to be at that future date. That's pretty compelling.
Not only compelling, but I would say unique in the financial services industry, right?
Absolutely.
Insurance advisors, agents are the ones that can sell these products that can bring that degree of certainty, comfort, guarantee to their consumers. And if you're an agent out there and you're not talking about annuities to your clients, you're really missing the boat. So with that in mind, pick up the phone, give Tim Luby a call, reach out to Gord Marketing, talk to your marketer. Give us the opportunity to help educate you, introduce you to a market that perhaps you're not taking advantage of. But for now, unfortunately, Tim, we've run out of time. Before I let you go, I would ask that if you don't mind, click subscribe at the bottom of this video, as well as the notification bell, so that every time we come out with this kind of helpful content to help you drive more business, increase your sales, and grow your pocketbook, you'll be sure to know about it. But for now, from Tim Luby and myself, happy selling.